Have we hit market exhaustion, or are we just taking a breather? Some charts say we're going up, some charts not so much. Lots to talk about. Sit back, let's get started. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links on today's video. Also, if you're looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. So it has been an interesting year. So are we at a point where we have seen market exhaustion? Or are we just taking a breather for a leg up or something else? We're going to discuss a lot today, introduce some new charts, some ideas on our agenda. Big charts, always. Lots of charts today. Sector spotlight. Going to see some interesting things there as well. What keeps me up at night and game plan going forward. Let's go check out the big charts. All right, first up, let's talk about our process. We utilize the charts. This is called technical analysis. Fundamental analysis is when you take the underlying macro data and then we look at the cycles. This is something that has evolved for us. So first up, when we talk about the charts, what do we see? This is your monthly view, your long-term view, okay? We've talked about this before, but up top here is what's called relative strength. Obviously tells you the strength of the overall market. And as you see, you have a series of lower highs as the market's gone up. That is not a bullish sign, okay? You want to see both going up at the same time. The other thing that I noticed here as I prepared was down here, maybe a little bit of a close-up, but momentum has stalled. Now, I thought we were going to get a positive crossover on the monthly chart, which would be a good sign, but it has definitively stalled. As of today, still positive on the long-term view, but we'll continue to watch that. Midterm, this is our weekly chart, okay? Still looks very good. Really can't break out, so to speak. We've been stuck all year in this 50 range. So again, not a lot of strength that we're seeing here in the market. And you can see we've kind of consolidated here, but we are positive on the midterm. So here we are Friday morning, I guess about 11 o'clock, we're recording this. And it's interesting to see that, well, the markets have now turned positive. So last night we had the last of the FANGs, right? The big companies report. And we really didn't see a big move on the market today. So why? Well, for starters, some of the companies, one in particular, can't give specifics because of compliance, but now, they've had increased revenue of 10% and the stock's up 90%. So I think it's gone a long way, and really that's probably why we're seeing a pause today. The other thing that we're looking here in the markets is a definitive consolidation. We can't seem to break out here. We're stuck in this channel over the last month or so. We'll see what happens. I mean, right now, when you go down to the bottom here, sorry about that, I'll come down here. And we look at momentum, and we have had a negative crossover on momentum this week. So we'll continue to watch that. So right now, yes, we've had a negative turnover on the momentum. I'm going to call it neutral today, Friday, and let's see what happens as we go forward. Now, a lot of people forget that the S&P is what the big TV uses, right? The newspapers, etc. But the NYSE is the full market. Okay, that gives you an indication of what's really going on. And as you can see, for starters, we're still down 14% year to date. We're just about ready to have another negative crossover, should happen today, and we are down today. So again, the broad market still is not doing much. It really is between the S&P and tech. Now, just so you know, even though I talk about a lot of these other sectors, these are still our core holdings, okay? So one thing with the NASDAQ, it's gone a long way, all right? I'm going back to 1997. What this chart shows is the NASDAQ 100 relative to the S&P. Okay, so in a performance, obviously. So you look here, back in 2000, not surprising, outperformance. We actually broke above that a couple weeks ago, which is a very, very bullish sign, but we've come back and we're hanging around there. I think that we've gone way too far as the overall markets, but we'll see. Obviously, the Fed continues to pump in. If they're pumping in, we're going to follow that lead. You know, the last thing I'll show real quick is going to be new highs minus new lows, right? So this is underneath the hood, so to speak. This is our NYSE, again, the full market, and then your new highs minus new lows in a histogram. And as you can see, there just isn't much happening, okay? You have surges when the markets are up, and we're just not having that in the overall market, which again, I'm going to say it gives me pause, but there's still opportunity, which we're going to talk about in our sector spotlight. All right, before we get into the sector, I want to remind you, just did an educational video about the 60-40 portfolio and is it broken? I think that'll give you some good information as far as, and when I get into today's presentation here, because I am diversified like I've never been right now, but not in core asset classes like small caps and mid caps international, okay? So the first thing you have to look at right now are the cycles. Okay, cycle 1 is the Goldilocks. That's when things are growing. We are in cycle 3. We've been talking about this, right? When obviously you see inflation, stagflation, right? Markets stagflate as well, okay? And what you really see in that is the dollar, okay? So the dollar, what happens is when we were in cycle 4, we were long the dollar, and then you look at cycle 3, what happens to the dollar? Goes down. Now, another reason we're seeing a big time devaluation here is because of what the Fed and the government's doing. Okay, all this money printing that they're doing, they are devaluing the dollar, and that is not a good thing. Now, where it helps from an investment standpoint is commodities. So the correlation right now between the dollar and commodities is 0.97. Meaning they go in opposite directions. So here you go. Dollar down, commodities up. So you can look up commodities. There's a basket of them, 13, 14, whatever the number is. I'm in about 4 or 5 right now because they're not all the same, right? You also have to look at, is it something that's being utilized right now? But I'll show you a couple. Okay, copper. Copper's been a strong one for us. Up, quite frankly, better than the S&P over the last month. Now, we are in a bit of a consolidation period. That's okay, though. That's a good opportunity, and that's where I use that opportunity this week to add to it. And again, you can see dollar down, copper up. The other big one is lumber. We've had a huge move in lumber. Now here, not only do you have inflation helping it, but you have demand, right? Because of housing, because of low interest rates. So you've got a double whammy here helping you. And it's, again, a nice place to be. Got overbought, right? This means it's overbought up here. So, again, consolidation time to add to it or time to get in. Right now, I would say we have our full allocation. When it comes to commodities, I do no more than 4%, okay? So what you're seeing so far is just a lot of diversification, and we're utilizing the cycles. So if we're devaluing the dollar, okay, the dollar goes down, who benefits? Emerging markets, okay? So it's cheaper to buy goods now, and of course some of these countries, okay, are going to do better. Now, I'm not going to go through all of my individual countries I've bought recently. You can schedule an appointment for that. I'd be happy to share that with you, but look around. I'll talk about one, because again, cycle 1. China, unfortunately, and I say that because of what's happened, is in cycle 1 right now. They're growing, right? They've slowed things down on the virus side. They're back to growing in a big time, and I predict them to be cycle 1 the next 3 quarters. So a lot of opportunity, but you have to be selective because some countries are where we are, some are not. So we've got a few that we like right now. So the other big thing right now is the Treasury and the dollar. We've talked about that, obviously. Okay, we are now at an all-time low in the 10-year. Everyone said, no way. 60 was the number. We're not going to break below that. I mean, we were 55.55 on, okay, the 10-year Treasury, which helps a lot of things. It helps some of our other core assets in cycle 3, like utilities, REITs, consumer staples, okay? And then the big one, hello.
Gold.
Between the price of treasuries going down, the devaluation of the dollar, gold has just soared. Silver, its friend, has gone with it. Personally, I feel we've gone a little too far. When you look here, we've had several consolidations. It was a month ago I said, look, we've got a consolidation. I'm expecting another breakout. Boy, do we have it. I think it's a little too much. Probably due for a pause here. We see gold volatility coming up a little bit, so I will pause there. But I might be going into miners in some other areas. Let's see how this shakes out. But this has been a great move for us, both gold and silver. So now let's go to what keeps me up at night. All right, first up, GDP came out yesterday. We've been talking about this for some time. Obviously not a good print, minus 33%. That is a record, as you can imagine. This is so far beyond 2008 and 2000. I mean, this is growth, right? This is what's happening out there right now. Some of the things we look for behind the scenes, right? This is from OpenTable, data we get from them. And you can see down here, if you zoom in, it's gotten a little bit better, okay? But we're still at minus 60% on restaurant reservations, okay? And then business closure by industry. This is coming from Yelp, okay? Restaurants is number one as far as permanent versus temporary, shopping and retail, etc. This is not a good thing, okay? We are seeing a tremendous amount of businesses go under. Talking to some people here locally, it's going to be surprising. Actually, I'll put a link below to USA Today. They had an article about our town, Bethany Beach, and the impact, and we're just one of many small towns in America getting hit. I think the biggest story continues to be unemployment. Now, there's two numbers. BLS, okay, Business Labor Statistics, which is the CNBC number. So when they say 1.4, that's the number they give you, okay? But you have the DOL, which is Department of Labor, which is what I'm looking at right here. So you see the numbers, it's going to show you the trend, right? We're still printing 1.4 million a week. That is awful. Now that number is 17 million. It's saying 11%, but that is not the correct number. Why? Okay, because the Pandemic Unemployment Assistance Program continues to see big numbers, a little bit better, but combined, right, yesterday we're looking at over 2.2 million, okay, and that's 30 million. Now, down, okay, that's not so bad, but we still have 30 million people that are unemployed, and that is just tragic, and obviously that's going to be a drain on the overall economy. So I think that we've shown this before, okay, the V-shaped is not going to happen, especially where we see continuous numbers going up in this virus. Already, my kids are going back to college. One of them sent an email this week, said, pack light, prepare to leave, okay? Because they don't anticipate that. And think about all the businesses around, all these major universities that get hit without student population. I mean, it's really going to be bad. Plus the simple fact that everyone's still going to be working from home, so all those businesses won't be going out, etc. So right now, where are we? We are definitely in a global slowdown. Couple areas we talked about, right, that are not right now, but it's still too early to determine. Yes, there's a big disconnect between the stock market and Main Street. So we continue to watch that, look for the signs. The Fed keeps pumping money, right? If they're going to do that, obviously we're going to be in the market, but eventually what's going to happen? I don't know. So market exhaustion, probably a little bit, right? Taking a breather, no doubt, and trying to find out the next direction. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.